Okay, you are welcome to the channel once again. We just want to talk about candlestick pattern. Candlestick pattern. The candlestick pattern is a Japanese candlestick. It was originated in Japan by a man called Monahisa Homa during the 1700s. That is almost about 300 years ago. It was introduced by the Western world by Stephen Hinson. You can read the history there. So how can we use the candlestick pattern to actually know what is happening in the forex market, in the crypto market, or anything that you can trade, whether you are trading stocks or indices, in as much as candlestick is concerned. So how can you read the candlesticks? The candlestick have an opening. It has a high, it has low and close. And when you look at the two candles there, the green candle represents the buy or the buyers. And how do we know how the buyer or a buy candle starts? You remember in our previous video, we talked that, or we said that there are two particular animals used in representing the market. The bull represents the buyers. And when the bull wants to fight an individual or group of person or whatever, or an animal, it bend its neck down, then lift the animal up. That is the reason why the opening of a buy candle starts at the support area, the down area. That is the reason why you are seeing the opening of that candle is on the support area, on the floor. Now, that place you are seeing shadow is where the price got to before it closed and opened at that area. And each of the candle represents a particular time frame. This one could be 1 minute, and it represents the activities that happen in 1 minute. This could represent 1 year. It also represents the activities of what happened in a year, or activities of what happened in a month. So each candle represents a particular time frame. Now, looking on the other side of it, the opposite one, or yes, the red one. The red one, danger. That is sellers. And where does the candle opens? And the animal that we use in representing the sellers is bear, because when bear wants to fight an animal, it drags it down from up to down. And that's why the opening of a bearish candle starts from up. And the high, that is where market rallied to before sellers came in, being the bear. They came in and start dragging price down. And the closing of a bearish candle, which is the red one, usually at the bottom. So this is how, as a beginner, how you can read these Japanese candlesticks. So try and watch the video so that you can understand it. Moving forward, it's a bullish reversal candlesticks. How can we know bullish reversal candlesticks? We have hammer. I have always talked about this particular candlestick, hammer. You can see it's a bullish reversal candlestick. Why is it called bullish reversal? Because price went down. The sellers brought the price down. Now, the buyers rejected the price, that they don't want to go further down. And that is the reason why you see that shadow or the wick, and they drag price up. And it's represented by this hammer. So whenever you see this hammer at this type, at the discount area, which is at the support area, when price has gone low, then you see this type of candle. Once it closes, my brother, note that price will go higher, because the buyers, they have rejected from buying at that they don't want price to go further low. These are the candles that will show you or help you to read the chart. For those who continue to ask questions, how can they recognize? Yes, you can use this particular hammer. When you see it at the premium side, that means sellers are in control. They don't want to go further. They are bringing it down. So that one will also show it. Now, we look at the next candle. We have bullish engulf. Bullish engulf. In our previous video, I told you that whenever the high of a bearish candle, the last down candle, a bearish candle, whenever the high of it has been violated or engulfed, that validates that price is gonna go high. Yes, it depends on the time frame you are using. So this, whenever you see this type of candle, when you see it at the support area, it means that price will go high. And that's the only way you can see this type of bullish engulfing is at the support area. Remember, bull will always lift the animal from ground up. That's why it's called bullish what? Engulfing. So we have another price pattern. It's a piercing pattern. These two candlesticks. It's a reversal candlestick pattern that forms after a decline in price. When there is a decline, when price has gone down, then you will see this type of candle. Once you see this type of candle, note that price will likely move up. Then we have the one we call Tweezers bottom. Tweezers bottom. Check your chart. You can backtest. You will find these types of candlesticks. Whenever you see this type of candlesticks, it depends on the color, because some persons might tag color. Anybody can represent the buy candle and the sell candle with any color of his choice. But here, the red represent the sellers, while the green represent the buyers. So whenever you see this type of two candle closing at the same area, the same height, the same everything, it is called Tweezers bottom. And where do you see the bottom? That is at the where you are standing at the support area. Once you see this, it's showing that it's a reversal, that market wants to do what? Go up. Market wants to do what? Go up, because the price went down and now the buyers rejected that price and push it up. So once you see this type of pattern occurring, note that price will surely go up. Now, another candlestick that you should also look at, this one is called the morning star. The morning star, there are three. It's a bullish reversal candlestick. This morning star, you can see the bearish candle, then you see the one in form of a doji. You see how to recognize it. You see the first candle has a bearish close. That means the sellers brought price down. The second candle has a small range. The third candle closes aggressively higher, more than 50% of the first candle. And this is what a morning star means. You see, on the first candle shows the sellers are in control of the price. Sellers are in control of the price. What about the second one? The one that look like plus. You see, on the second candle, there is an indecision in the market. I told you earlier that whenever you see a doji means indecision. So you should not, why they just allow the doji to close, then know what the next candle is gonna show. So the doji also means equilibrium. That means GG, nobody win in the market. On the third candle, the buyers won the battle and the price closes higher. That is how you can. Okay, how can we find high probability bullish reversal? How can we find it? Look at Look at this chart. Yes. So if you look at this now, this is at a support area. We can call it as a support area. So immediately you see this type of candle, is that not the same thing we talked about? Then it shows that the price will go up. And now look at that particular candle that we talked about. Look at it here. You can see that candle. You can see that candle. It's very obvious. Look at it there. Yes. So, and what happened? Price went up. Price went up. So these are ways that you can actually find high probability price reversal in price. There are other candles that are very important to our trading. So now we look at we have talked about that one. Then let me look at another candle that is very much important for our trading. Okay. Doji can occur in various different forms. You can see the one that look like plus, and this one that you see that is called dragonfly doji. Dragonfly doji usually occur at a discount area, meaning at the support area. And what does it show? It shows indecision in the market. And once you see this dragonfly doji, it means that price will surely go up because the opening and the close is the same area. And you can see the long wick, meaning that sellers brought price down and buyers took price back to where it opened. Say, no, we can't go further down. We can't continue to bring crash the price of this commodity. We want it to go high. Let it be at the place where we started. Then let's know what the next action will look like. And whenever you see this type of action occurring in the market, dragonfly doji usually occur at a support area. Then what is the opposite of it? We have different types of doji. You can see the plus one, the one that look like plus. This is another type of doji. We will call it dragonfly. The opposite of it is gravestone doji. The gravestone doji usually occur at a resistant area, that when price has gone very further and people will always want to buy at discount, they say no. The buyers say no. We can't continue to buy at this thing. The sellers now, they bring it down to where it started again. So whenever you see this type of candle occurring at the rear, note that price must surely do what? Come down. Just wait. Let it close, because the opening and close is almost at the same distance. So allow that candle to finish. Once you finish, check the overall scenario of the next candle. Then you can enter your distance and move on. We have other candles, but I want you to focus on these ones that I have made mention of. Yes, we've talked about the dragonfly and there was bullish harami. This one is called bullish harami. So on your own leisure time, go through it. Bearish harami. So you can use all this as your trade setup. We have spinning top. Spinning top also means an indecision in the market. It's a doji. Whenever you see this type of candle, it might occur at the middle, then you see one at the left or the right. It can occur anywhere, but whenever you see it, it shows indecision in the market. It shows indecision. So you see another one of it. You see the doji itself, then you see the dragonfly, you see the gravestone, and so on and so forth. Then look at how we can identify this, what we are actually talking about, how we can identify it in price action. Yes, so you can see what we are actually talking about. You can locate that doji here. So this is a trend continuation. It shows a trend continuation. So for benefit of those who are new, so you can go on and study these candlesticks. It will really help you. So that is how we'll come to the end of this candlestick pattern. So go through it, watch the video over and over again, then study the chart. Do not be afraid of it. It will really help you, more especially the dragonfly doji, the hammer, and others of it. You say, look at this pattern here. Whenever you see this pattern occurring, this one at a, remember I told you that it does not matter the color. Look at this one now. This one has a bearish color, while this one has a bullish color, but it occurred at the resistant area, while this one occurred at a bullish area, at a buying area. So colors does not matter, but it signifies, this thing signifies price what? Rejection, rejection, rejection. That's why you are seeing those weak. Whenever you see weak signifies price rejection, and the full body signifies that a particular party in the market controls the market. If you see a full body like this in green, a buy candle, meaning that the buyers are in control. They don't have anybody challenging them. The opposite, which is the sell candle, whenever you see it with a full body, it also means that the sellers are in control in the market. So these are ways you can read the chart. These are ways you can read the chart. So whenever you see this type of candle, we call it marobozo. So once you see it moving, note that if it is sell or buy candle, meaning that that party is in control of the market. Yes, so you can also see a little wick. Maybe price has shifted up and you see a little wick on top of it. It means that there is a rejection of price at that particular height. They want to bring price a little bit lower. So wick always signifies what? Rejection of price. And here we have a strong rejection, a strong powerful rejection. That's why you see that this particular candlestick is a strong price rejection versus bullish close. Yes, we can see that the price was rejected. The thing bought to an extent, and now the seller say no, we will not continue. Then they brought price, they push it down to this extent, and we call this pin bar. So whenever you see pin bar at a resistant area, this is pin bar that we have been talking about. Whenever you see this, you can use it as your yardstick to trade. All you need to do is wait until your call. Yeah, so that is how we'll come to the end of the tutorial for the candlestick pattern.